Friday, March 28th. Happy Friday. I hope you had a good week because the markets, it's been okay. I mean, let's be honest. You know, we look at a weekly candle of the Qs here. The weekly candle, you haven't moved much. I mean, let's be honest. You opened up the Qs at 487. Right now, you're at 481. It's down 1.2%. In a week where we've had 2 years of up 20%, that's not moving much. You're sitting right there on that green line, which is, again, anchored from COVID, where you see right here in August of last year with the downturn, the Japan unwind trade. What was the low? 423. 423. And we've moved up since. So it's right on that trend line. I wouldn't say we know exactly where this market's going. I mean, we can look at SPY. You know, SPY at 6,000 is where everybody wants it to be. It's at 567. You know, in pre-market, you're at 564. That 549 right there, holding as support. Your MACD, right on the oscillator. Your RSI, 47. Again, your Bollinger Bands have cinched up. They're contracting. I don't know which direction this is going. You had the death cross here. If we look at a daily, which most algorithms will use as far as algorithmic trading in large volumes, they'll trade in and out based on the daily. They'll decide, okay, we're going to do this today. We're going to do this tomorrow, blah, blah, blah. But we're under the 200-day. And that's never a good, like, oh, my God, I've got to buy. When you've got tariffs on the loom, blah, 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 and you've got inflation. Today's biggest thing, inflation. The Fed's preferred inflation gauge comes in a hair hotter than expected at 2.8% versus 2.7. The markets didn't react. I mean, if you look at SPY and we turn on this after hours and we go to a 5-minute chart and we look at this 835, you know, the 830, when it came out, it opened at 565. It closed at 565. The next candle, which looked good, it went up to 567. Looks great. I mean, that's not even a 1% move. So it looks huge, but it's really not. You know, it's not. I mean, the markets just didn't react. You know, we're not in a market where good news is good news. We're not in a market where bad news is bad news. It just didn't react. You want to know why? Because next week's April 2nd. And April 2nd is when the tariffs are either hitting or they're not hitting. And the market doesn't want to price in. You don't want to do stuff on a Friday. Sure, this is great to know. It's great information to have. But I don't think you want to act on it. Now, the market is going to be consumed today with Coreweave. Coreweave is an IPO. What do they do? Long story short, they rent out data centers. Their largest customer is Microsoft. Shai, I was going to write something about this. Shai put it perfectly here. I have zero interest in Coreweave IPO. You can go and read this. I'll include this in the newsletter. How do you get the newsletter? You go over here, Linktree down below. Daily Stock Pick newsletter. I probably should put this up top because that's the one place you should go is signing up for the newsletter right there. But I'll put this in there. I'm never a fan of IPOs. I agree with Shai's take on this 100%. I think this IPO is tradable. The symbol is CRWV. If you'd like to trade it, trade it. I'm never a fan of buying and holding an IPO until I model out their fundamentals, their financials, the actual business. I want it proven out. There's too many questions about this. And most of all, I want moving averages. Remember, I'm more of a fundamental and a technical. I need both. So just my take on this should not matter for any decision that you make. I've been wrong on Reddit. I've been wrong on ARM. I've been wrong on Meta and many other IPOs in the past. But I'm just not a huge fan of them. And the reason is just because risk reward. And in the past, when I was younger, absolutely, I'd jump in on this stuff. But if you want to read about Coreweave, here's an article. Sets IPO listing price of $40. That's what it's listed at. Now, when it actually gets to you, it could be $20. It could be $48. It could be $60. This is what the price is when you get, I'm a high net worth individual. I get sent an email from Fidelity. Would you like to participate in this? They will sell it to me for $40. The midpoint earlier was 51. However, the company downside incentivized investors. The reduction in share volume and value was also related to recent stock market volatility, according to Bloomberg. This gives its valuation around $20 billion. So there's not as much hype as there was 2 weeks ago or even a month ago when AI was crazy good. The market is afraid of a recession. Okay, a recent Seeking Alpha article poll showed the majority of respondents thought a recession was likely. And the best defense, they said, was dividend stocks. Here's a list of 10 U.S. stocks with strong growth and dividends according to Seeking Alpha's quant metrics. Okay, 10 stocks. And year-to-date performance, you can see it right there. FNF is up 16.9% year-to-date. USAC up 17%, NTST up 8%, and that doesn't even include their dividends. GEL, which is Genesis Energy, is up 57% year to date. It's March 28th, year to date. So there's opportunities in this market. This is just pointing out, hey, these big dividend stocks, I mean, we can look at GEL. GEL, the market cap, $1.93 billion. Wouldn't fit my typical, thing. It's an energy stock. We've talked about TLN. We've talked about all of those energy stocks that have a strong buy in the quant. This is one. The yield, 4.19%. And year to date, 55.89%. Valuation C+. You can go and read Analyze with AI. Okay, all of these things are in Seeking Alpha. If you don't want Seeking Alpha Premium, go and find a tool that will provide you all of this information. Again, those are 10 stocks that are dividend and growth. So I like them. What are the biggest movers today? CureVac rose 10%. Shares rose after European Patent Court upheld it. I don't care. Rocket Lab. I'll go over this one in a little bit. Shares rose on the company along with Stoke Space Technologies. Secured a U.S. Air Force contract. This is one of Shai's favorite. It's up 8% in pre-market. Again, it's hype. U.S. Steel, you can trade this one on hype. Shares climbed after reports that Nippon Steel met with the White House officials and offered billions in investment to modernize aging Rust Belt facilities. The biggest loser, Lululemon. That's a canary in the coal mine. People may not be spending. And that's what consumption was. But my take on this morning, I heard some commentary. Did the 25% tariffs push people to buy cars because they're afraid, because that's going to push consumption? Because I heard this morning on some commentary, income is outpacing consumption, which makes the sentiment even worse, because that's a fact. Okay, sentiment is an opinion, but the fact is, when sentiment is bad, and then you have a correlating fact where people are saving more money, makes you worrisome. Now, just notice there's a trend in this podcast right now to scare the bejesus out of you. We'll get to the end, but understand, I don't know where the market's going, neither do you. GLP-1, it was a big factor. Novo Nordisk is currently trading at its lowest price to sales ratio since March of 2020. This is the biggest company in Europe, and they hold a significant portion of obesity care and diabetes market. Novo Nordisk. Let's go over to Seeking Alpha and look at NVO. Is this a good buy? Well, the quant says it's a hold. Why? Valuation still extended. And when you go and look at Analyze with AI, you can see Eli Lilly would be my preferred. The valuation are somewhat stretched. For example, the price to book is significantly higher compared to the sector of medium 2, indicating the stock is pricey. However, the forward PE is 18, more attractive than the sector at 25. The momentum has sucked. And I've said this before. This is probably the most important factor of a stock, momentum. 3 months down 19%. Is it time to get in? Let's go look at the chart. I don't like Novo Nordisk. I mean, look at this weekly. Are you going to time it? You know, the 50 days moving down, the MACD super low, the RSI at 31. But when they, you know, the factor grades a D on valuation, I say, maybe, you know, I don't want to time this. So let's look at a strategy. Does this 4-hour algorithm work? No. Does the 65-minute algorithm work? Let's look at that one. It makes you 10% over the last 8 months. Doesn't work. Let's look at the 1-hour strategy. Maybe you could trade this one for some volatility. Makes you 3% over the last 59 days. So this is the only strategy that would work. But I don't like those stairs. That's a staircase down. So for me, it's, you know, again, I read this on Twitter and I said, do I want this? And then you go over to OGAS. NVO is starting to get really attractive. 17 times forward earning, 19% annual earnings per share growth, 45% return on invested capital. It's getting interesting, but I want to find a strategy that works with it. And so for me, I'd rather have Eli Lilly. And the reason I'd rather have Eli Lilly, because A, I like an American pharmaceutical company. Even though, you know, what RFK is going to beat these guys down, I still like this one because over, you know, the 4-hour algorithm, it makes you 58% over the last 24 months. Buying and holding has made you 145. And I have identified this range that is tradable. That's the only reason. So if you want to get into GLP-1, find a strategy and do it. Read these things and then find a strategy and do it. But we are still in a GLP-1 market. My fat ass is proof. I have burned over 1,000 calories a day for a week, yet I'm eating 3,000 effing calories a day. My fat ass is proof. Let's talk about Google. This worries the hell out of me because I'm seeing this all over Twitter too. The tagline, don't Google it, grok it. Every AI right now, whether it's Grok, Perplexity, or even Copilot or Chat GPT, they're going after Google search. And they're having some effect because I can tell you, I'm using Perplexity a lot more than Google these days. So I'm a little bit worried. Does it make sense to get rid of my Google? I don't think so because I still use Gmail. I still PC, you know, I still get green bubbles because people have Android phones. I still know that Waymo is starting their self-driving here in Atlanta. I've identified a range. I like this range. When I go and look at Google and I look at the value of Google, I don't think it's crazy. But again, the momentum sucks. The valuation, even though it's an F, I still think this is still a very valuable company. But they're revising it down. It's almost even here. 26 earnings per share up, 27 down. Revenue 17 up, 31 down. Are we going into a recession? Maybe. And you know, the other one that might be going after the search revenue is Facebook, or should I say Meta? Because here's the thing. The new Friends tab on Facebook, it's retro Facebook. So now you can see your racist Uncle Bob ranting about immigrants, or even your liberal Aunt Mary screaming about Trump and Elon. How fun. I would argue I don't want to see my Friends tab. But that was the number one feature when people wanted Facebook was, hey, I want this Friends tab. And so Zuckerberg is listening, finally. It's not just all about the ad dollars. He's doing something. Why? Because I think people are going other places. And that's a little bit worrisome when you look at Meta's actual model, their business model. They need eyeballs. Now, Wall Street says it's a strong buy. They think it's worth $765. Have they brought it down since this crash? Nope. When you look at revisions on Wall Street, though, they're bringing it down. So you want to take a look at these things. Again, in the quant, it's a hold. Has it ever been a strong buy? No. Does it matter? No, because the stock price has gone up. But you do want to get this one. My opinion on Meta, again, if I go and look at Meta, I want it under $600. And I don't say, you've got about your death cross here of the 50 and the 200 day. I don't say go balls deep on this one. I say start adding to it, because I think later this year, we'll talk about this. Later this year, I do think that you get some improvement in the economy. You get some steady growth. So you're just setting yourself up. It's Sam Altman. Let's talk about this one, ChatGPT. It's super fun seeing people who love our images. This shit's all over the internet. It's cartooning everybody. We are going to temporarily introduce some rate limits because our GPUs are melting. Is this bullish? Does he have to buy more NVIDIA? Who knows? But he's got an agenda. I don't think their GPUs are melting. If they are, there's a problem. And it might be, again, DeepSeek managed to solve the problem. They don't have GPUs that are melting, and they outperform ChatGPT. And even Sam Altman said it was impressive. So again, understand where this market's going. Are we in an AI bubble? Is it a GLP-1 market? I would argue it still is, but April 2nd is going to be key. Now let's talk about something that comes in from time to time. And I say time to time because this is short report number 4 on AppLovin. AppLovin was down 20% yesterday after Muddy Waters disclosed its short shares of AppLovin in a posting on X. Okay, the Muddy Waters claims after AppLovin was the target of short reports from Fuzzy Panda. I mean, shit, listen to these names. Fuzzy Panda, Culper Research, and Bear Cave. And now you have Muddy Waters. What do these shorts do? They find something and then they just latch onto it. And then they put out a report and they can tank a stock by 20% and make a shit ton of money. Okay? So what I did, and this is what you should absolutely be doing. I went to Perplexity and I said, what should I know about the short report today published by Muddy Waters? Can you explain it to me like I'm a 15-year-old and know nothing about the company? So Muddy Waters, a well-known short-selling firm, accused AppLovin of using shady ad practices. That's what AppLovin's business is. It's ads. Scammy tactics, they're in quotes. Muddy Waters claim AppLovin illegally collects user data from platforms like TikTok and Meta to target ads, violating their rules. That's a bad thing. If they get banned by TikTok and Meta, they no longer have a business. Fake growth. They say 52% of AppLovin's ads results are just retargeting, showing ads to people who already know the product. Not good. Risk of bans. If platforms like Google confirm the violations, AppLovin could lose access, similar to the past cases like Cheetah Mobile. CEO previously denied similar claims, calling short sellers unscrupulous and defending their AI-driven ad tech. The company hasn't responded yet to today's report. Why it matters? AppLovin stock soared 700% on the AI hype, but short sellers argue the growth is built on shaky ground. If the allegations stick, advertisers might flee, hurting profits. Bottom line, Muddy Waters bets AppLovin stock will fall further, but the company's response or lack thereof will decide if the drop is temporary or start of bigger trouble. AppLovin, when you get a stock like this, we saw it with Zeta, we saw it with tons of the Seeking Alpha picks. Okay, let's just look at a weekly chart of this. You're still high. You're still high. I mean, this one went all the way to $525. $525. Where'd you start? In December 2022, you were trading at $9. That's an enormous gain. Short sellers see this and they latch on. So I don't think it's crazy that you're seeing some short reports on this one. It's crazy that it's the fourth one. And the company hasn't done a great job of coming out and saying it's totally wrong. And you can see the algorithm had you in here at 272. It was going nice. I thought it was going to fill this gap to 374. It didn't. But if they come out and they say something about it, I mean, let's just go and see. Let's see if AppLovin has responded, because Seeking Alpha picks hasn't responded. I do think that they will. Yeah. AppLovin gains as Loop Capital defends company hires law firm to investigate short activity. Loop Capital, that's Gene Munster, who I like. We think accusations of faulty conversions and fraud are easily disproved by speaking with performance marketers and measurement companies. That's why you're seeing this up 8%. So are they right? Or is it going to be 100%? No. The second somebody comes out and says, yes, I'm pulling my ad business because I've seen this, AppLovin could be killed. But again, its valuation is not horrible. It's trading at current prices, 34 times forward earnings, but its PEG ratio, when you put in their growth, it's super, super good. But this is what you get when you have a top selling stock like this. You just get it brought down. It's making money. It's a small cap stock. You know, you can get Unity software, which is going to compete directly with AppLovin. So you can read all of the Analyze AI and stuff like that. Perplexity, if you don't even have Seeking Alpha, you can just go to Perplexity and type it in. Okay, they will show you all their sources. It's great. It's great. Now let's talk about one of Shai Boular's favorite, Rocket Lab. Huge win. It's up 6%. They have a U.S. Air Force contract. This is finally getting some revenue and some money. $5.6 billion contract. That's huge. But they're not making money yet. It's an $8 billion market cap. They are not making money. Okay, they do have revenues, but they are not making money. When you go to valuation, it's still a bit stretched. Profitability, it's horrible. They're not making money. So if you're going to bet on something like this, you're going to have to understand you're going to have to deal with volatility. It's just a company that doesn't make money. Now let's talk about a company that is making money, and I've got money into it, is Broadcom. Your boy here said, hey, 190, it's going to hold. Broadcom slumps, falls below its 200-day average. This is just an article from Seeking Alpha. Okay? The next level of support for Broadcom is 170-150, which would be a Fibonacci retracement of the 2022 low compared to the 2024 peak. I'm not good at Fibonacci's. I'm not going to draw it. I am going to go over and look at the chart because I've identified my support level at 184 and we broke down. I wrote in the paid newsletter support chat, I'm not getting rid of 184 because I think it's $250 stock. Well, when you go over here and you look at Wall Street analysts, what do they say? $250 plus 45% where you're trading now. Yes, the valuation sucks. The most important factor, momentum. 3 months, it's down 28%. Now, when you look at this, their next earnings, I think it's somewhere in May, if I'm not mistaken. But their next earnings is going to be crucial for this stock. Because the last stock earnings that we saw, I'm going to bring this back so we can see the last earnings. The last earnings that we saw, it went up a little bit and then it just crashed. And I think it's market momentum. But go to the previous one. Okay, this was where you were trading at 181. And the CEO in December said, we've got plenty of customers who are increasing their buy with us. And it went from 181 to 210 that day. That's the gap. We have retraced it completely. The next earnings report will be big. And I have said, I have traded this one. I think my average purchase price is like 130 or something. Yeah, I started buying at 113 or so. I think my average purchase price again is like 130. I'm going to start trimming because what did I say? I said I'm holding this for long-term capital gains. Well, that was March 18th was my first buy that week. So I'm going to start trimming this and then I'm going to start buying it again because I like this company. This is the company. I own 3 chip companies and none of them are doing good right now, but it's NVIDIA, it's Broadcom, and it's Credo. All 3 for different reasons. Okay. I have my reasons for holding them. The strategy changes from time to time. But this one didn't. I will buy it back again. I will just take the 15% and throw it out there. So I like that strategy. That's something that I've come up with. Now, China is actually stimulating their economy. The U.S. is actually shrinking their government By taking money out of it, they're not putting incentives. We are actually cutting our workforce. So maybe China's the next great Mag 7. Alibaba leads China's terrific 10 to rival the Magnificent 7. Okay, this is a whole report. The terrific 10 is made up of Baba, Tencent, Matushin, Xiaomi, JD.com, NetEase, Baidu, BYD, Geely, and SMIC, not SMCI, SMIC. The rise of DeepSeek demonstrated how artificial intelligence models can be produced for less, prompting a new wave of tech investment in China. And that's the report. Maybe you just want K-Web. Okay, maybe you just want K-Web, which holds many of these stocks. It's jumped 24% year to date, while the MAGS has declined 12%. That may be where you want to put your money. That may be where your sudden growth spurs, because they are stimulating the economy. We're not. Okay? And Tesla, Wedbush sees shares doubling. HSBC warns of a 50%. Who are you going to believe? Well, Tesla, I've got the strategy for it. It's the 4-hour algorithm. Okay? Tesla right here, 4-hour algorithm makes you 168%. I didn't believe it. I said this many times before. I am a dumbass when it comes to this stock. Do not believe me. And don't follow me, because I didn't buy it 248. Where are you trading right now? 277? 277. It's been a nice move. The algorithm didn't get you out when it dropped down here to 222. You could have bought it 222. It was still in. And I should have bought it 222. MACD, super low. RSI, super low. I was at the Tesla dealership. They didn't have Model Ys for me to test drive. So, again, where does it go? Nobody knows. You're getting mixed signals. Where's the risk reward? Well, I hold it in XLY. I've got my own strategy with this one. And I am holding like $500 worth of buy and hold on this one. But again, I have missed out on this many, many times. So it's just, you're never going to be perfect. And this market will always give you mixed signals. You've got to choose which ones you like. And if you don't sleep at night, you're choosing the wrong ones. Amazon is cutting support staff for fulfillment services. This is based on AI. I guarantee you this is based on AI. Their fundamentals are fantastic. And they are starting to cut their costs by using AI. This is one company that I think will absolutely do it. And if there was a chart that I saw the other day where AI jobs are just going to destroy the economy. It could be, and this would be the leading one. You want to time it. It's ranked number 2 out of 27 from JD. Again, China is the top. So if you go back to, it's a strong buy in the quant, strong buy from Wall Street. You're getting it at under $200 right now in pre-market. Wall Street says it's worth $265. Risk reward. I like this one. I like this one a lot. And here's the thing. Sometimes I gloss over things that need much more explanation. Like when I said yesterday that I think Hood is doing things differently. Okay? It's not because the basis is I tend to be very decisive. I hate indecision. If you're sitting at the table with me and the waiter comes over and you say, and you sit there and just, it annoys the F out of me. Okay, Howard Stern talked about this with his father when his father used to scold him for not knowing what he wanted to order when the waiter came over. I'm decisive. I hate indecision. And I personally hate analysis. So I gloss over things. That's why I love Seeking Alpha, because I had a regular job and I could just look at these 5 factors and understand, okay, fundamentally, this is one that I want to dig in deeper on because it looks good. Fundamentally, it looks horrible. I don't even care. I don't want to dig into it. But sometimes I gloss over things. Yesterday, when I said Hood was changing things, this is a perfect explanation. Okay? Why is SoFi down and Hood up? When I said I started to like Hood because they changed the game, this puts it into words so beautifully. I always liked SoFi, okay? I will go back to SoFi and I will show you the chart that I put in on SoFi. It was a weekly chart and I had a range right there. Okay, this starts in January 2023. It traded in this range all the way out to here. Let's just bring this out here. Okay, that's October 2024. It traded in this range beautifully. You could buy this one when it dipped and then just sell it as it ripped. Today, I think it comes back to this range. And it's because Hood is just absolutely destroying the banking industry. They are doing it really well. And I said it on Spaces yesterday. Nobody is going to ask Robinhood to deliver freaking money to their front door. But it was a brilliant marketing strategy because you know what? I'm watching the 5 o'clock news last night and they said, and the news anchors joke, well, I can get money delivered to my door. I don't even need to go to an ATM anymore. Nobody's going to order that. Brilliant. I still don't like Robinhood for the GameStop episode that they did, the antics. Doesn't mean I don't want to make money because Robinhood, you can trade it in the 1 hour algorithm. And when you go and look at this one, this is great. You can run this. Or that's the Goldman. Let's put this one up. This is the 1 hour. Okay, it doesn't have you in, but over the last 59 days, you've made 30.3% on what? 12 trades. If you bought and held, you're down 9.2%. And maybe you want to use the 4 hour algorithm. Let's see how it does on that. Well, the 4 hour algorithm makes you 438% over the last 24 months. Okay, buying and holding, you make 392%. Your win rate is 50%. It has you in at 39. You're at 44 right now. So again, finding a strategy is great. And Shai puts it very well here. I mean, I read this morning at like 3 a.m. I was like, holy crap. And now, you know the Weinstein indicator that I've always talked about? Well, here's your boy talking about NVIDIA. I haven't watched this. Full disclosure, I haven't watched this. I just saw this morning. He's talking about NVIDIA. Avoid market corrections with the stage analysis from Stan Weinstein. Well, you can get that in Trendspider. You can import it into Trendspider, where it puts the 4 stages in your charts. And again, Trendspider is just the best tool out there. And you can get it, by the way, for a $20 trial. $20 for 14 days. Import my 1 hour algorithm. I put all of these things. What I'm going to do today is put some of my favorite strategies into the newsletter. So you can go and get it and import them. Get 14 days this weekend. Import some strategies. Start looking at stocks. $20 freaking dollars. Okay, and watch this and get your Weinstein indicator on your Trendspider. Now, let's talk about this. Let's just say you need to be ready when the market rips. Tom Lee here is saying the odds of a V-shaped recovery in stocks after April 2nd is extremely high. Tom Lee called it a face-ripping rally after April 2nd. Okay? He's always been bullish. So only the greats are actually blocked. And I posted this screenshot because that boy blocked me. He said my newsletter was in competition with Fundstrat. I have no idea. I mean, that dude's on CNBC. He's got hundreds of thousands of followers. But it's just crazy. Just nuts. Just nuts. But he's sometimes right. And I do think that the market wants to go higher. Trump keeps bringing it down with the tariff talk. April 2nd, it's put up or shut up. And I do think, let's just say this. I was added to a Signal group chat the other day. I don't know who it's from, but I was added to a Signal group chat. And they're talking about the second half of this year, focus on lower rates and lower taxes. Boy, wouldn't that be good? Well, the Fed's already going to lower 2 times. Maybe they'll lower a little bit more. That might be a problem. But if you lower taxes, maybe you start increasing spending. Maybe those people that we talked about that are saving start spending and the economy gets back going. So that group chat that I'm talking about, that Signal group chat, yeah, I don't know where it's from. There's defense secretary listed on there. There is, the Fed chairman listed on there, but I don't know if it's real. I'm joking, of course. But you need to be ready for this, okay? Tom Lee put out a video. There's a dry powder for a V-shaped stock rally. And the dude's awkward little head right here. I mean, I don't get it. I mean, he blocked me. So, yeah, I'm a little bit angry. But he's incredibly smart. Hey, he's been more right than wrong. But again, you don't need to be a genius to call a bull market because the market goes up most of the time. Okay? And then you have this. Jim Cramer says the market may be far healthier than we think. Shit, he just tanked it. The odds of recession now are 100%, just so you know. So, just so you guys know, for those with Seeking Alpha, I'm going to put this into the newsletter. And for paid members, I'll go over it. This is Peter Lynch stock screener. Okay, I created a stock screener for Peter Lynch. Trailing PE under 25. Forward PE under 15. Debt to equity under 35%. Earnings per share growth over 15%. PEG ratio under 1.2. Market cap over 5 billion. I left out the 5 billion because I couldn't find any that were good. But this is a list of stocks. Okay, I will go over a couple of these for the paid newsletter subscribers. But in the newsletter, I will include this screener for free. So if you have Seeking Alpha, you can use it. I'm also going to include this large cap market cap stocks. Okay, this quant rating or a buy or a strong buy. Seeking Alpha analyst rating, buy or a strong buy. Wall Street analyst rating, buy or a strong buy. Valuation up there. Growth is a B to an A. Profitability, B to an A. The only thing was valuation that I left down. You've got Netflix, Spotify, Amazon, Gilead, Taiwan Semi, Uber, and Melly. Okay, 8 stocks right there in that screener. Then I'm going to include this one because we talked about dividends being a big one if we're going into recession. This is a dividend screener. Okay, quant rating is hold to a strong buy. And then the 5-year performance up 20% to 300%. Consecutive years, 4 to 8. Dividend yield, 3.2 to 8%. Okay, you've got 43 results. Go and look at them. This is a list of stocks that are growing and have huge dividends. Go and look. So that's it for me. For paid members too. You know what? If you want to learn how to use the Seeking Alpha screener, I'm going to include this video. I haven't looked at it, but again, if you don't have Seeking Alpha, you can sign up for it over here on the newsletter. The newsletter has everything, by the way. If you look at the newsletter and we just go to yesterday's newsletter, right down here, Goldman Sachs says to buy a SPY on 5% dips. I included that strategy for you. I included the 1-hour strategy for you. Then you have your links for Trendspider. You can sign up. What I would like you to do this weekend, if you don't know fundamentals, sign up for a free 7-day trial of Seeking Alpha Premium right there. You get a free 7-day trial and $30 off your membership. And then sign up, because it's free for 7 days, sign up for Trendspider. And this weekend, go and use this stock battle 1-hour strategy in Trendspider and go and find stocks that are of good value that trade well on that 1-hour strategy. It'll cost you $20 for 2 weeks. Okay, just make sure you cancel your membership with Seeking Alpha if you don't find it beneficial. Okay, but you can get all this in the newsletter. And then why do you get the newsletter? Oh, because the pod notes that I read off of that you see me looking at my right here, I put them all in the newsletter for you for free. And yes, I do paid member stuff too down at the bottom. But all of these notes are free. And for paid members yesterday, I gave you my thoughts on the market and I told you exactly what I'm doing. My thoughts on the market right now and what I'm doing. I gave you everything yesterday. So if you have any questions or if you want the paid membership, you can certainly do it. Just go to the link tree, go down here to the newsletter, and all of the links are in there. It is, for me, this is something that I would have wanted when I was in my 20s, 30s, or 40s, and somebody hand feeding me this kind of stuff because I do think it's quality stuff. So with the paid newsletter, by the way. There is one stock, because as you pay me, I go through a company called Stripe, and that's what Substack goes through, because that's my newsletter provider. So I pay a fee to Substack to be on there. You know, every time you pay me, they take money out of it. And then there's a second company called Stripe, and Stripe takes huge fees. It's just fees. They make a tremendous amount of money off the fees that you give me. Okay? Yes, they bill. Yes, I couldn't do it without them. Yes, they're okay. Yes, they provide me full thing, but they take an amazing amount of fees. Well, this company, ADYEY, Iden, I think is how you say it. Well, look who their competitor is. It's PayPal, it's Block, and it's Stripe. Stripe is private. I can't invest in Stripe. If I could, I would, because I pay them so much effing money. And I like their founders. This is the next best one. So if you want to trade it, ADYEY, let's see. Is there a strategy? Because this stock is volatile as F. And here you go. 4-hour algorithm over the last 24 months. It makes you 69% versus buy and hold makes you 3.6. And you can see how it's just up and down. And right now, it's trading under that 200-day. It's a foreign stock. It is a foreign stock. So I'm not sure I'm going to buy this, but as I was looking at stuff, that's what I found. So again, Stripe is private. The only reason I'd go into this, I have to do more research, and I'll probably do it through Perplexity or an AI. But again, that's it. Now, today, I'm going to give you my several favorite Trendspider strategies. And over the weekend, I'll probably give you a summary of my favorite education newsletters. Because in the newsletter, there is an education section down here. And I do this from time to time where it's just, hey, this is time tested. And even Eli put it in the chat here. If you go up here and we look at this, this is more of a commentary on Gary Nation. This happens at least once a week with me. I get this feeling that I can't learn any more things, but I see one of your podcasts or go back and read and watch one of your educational videos and get a new insight to reading a chart and using Seeking Alpha. You can always learn something. I just wanted to say I really appreciate you and what you do. Like I told you before, I think my wife now asks me every morning, so what did Gary say today? Yeah, I put a lot of work into this. So I appreciate you guys, just being here and listening and stuff like that. But again, the education section is down there. I'm going to redo this front page too, but I'm going to put in some type of summary where it gets you to one place and you can find everything. So if you have any questions, you can hit me up. Again, Linktree has my email up here in the upper right. Sign up for Robinhood. I have a Robinhood account. I prefer Webull, which is down here to, maybe the 6th link right above the newsletter. And by the way, I know several people signed up for Visible through this link where you get $20 off your first month. I have Visible phone service. And so my fire tip of the day, if you're paying anything more than $35 a month, because there's 2 plans on Visible. There's $25 a month and there's $35. I think it's $35 a month. Let's see. Check out our plans. So it's $25 a month and $35 a month. Okay? There's no contracts. Super easy to switch. Unbelievably. You can pay annually and save even more. You save $145 when you pay for the year. I pay monthly, and I do have the Visible Plus. I upgraded from this $25 one. But for years, I was on this $25 a month. So my fire tip, limit your expenses. Limit your spending. That's what people are doing. That's what the PCE told us this morning, that salaries are outpacing spending. So people are saving more. So save more and go to Visible. Again, there's a lot of links like this. You can get my new Tesla. You can, refer a friend over to AT&T, which is the home service that I use. Savvy Trader, Follow My Trade. Linktree has it all. But if you have any questions, again, all the social networks are up here. So I'll talk to you later. Okay. Have a great weekend. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily hopes and fears.